There were job offers. I mean, I could make 1.5 lakh at that point of time. But I said, no, I don't want to die there. I want to work for myself.
How did you take that setback?
What setback?
You were not worried about losing credibility?
About what? What credibility?
The company is named after him.
Yes.
That's not a problem for you?
I have learned how to learn about the stock market from him. He's such a terrific global guru.
Would you be okay if people bought only ETFs and did not buy active mutual funds?
A lot of people, they tell me that first crore I want to earn from the... I don't think it works like that. If the market collapses, now it is already collapsed 20%. If it goes another 20% down with all this Trump tariffs and all, he's the guy who is going to be buying stuff left, right and center.
But why don't you do anything in debt?
I don't understand that.
But you could hire somebody who understands
Yes,
debt.
but I don't know what questions to ask him. We are not discount brokers. That doesn't mean that we are not technology companies.
You're looking at competing with discount brokers who can go as low as 0%. Why should somebody prefer Motilal Oswal to them?
They're young investors, they're not mature, so a lot of guys will get hurt. Dumb guys are going to make more money, I'm telling you.
April 2025, you think is a good time to get into the market. What about succession planning? What's the future looking like? Who will take over the business once you and Motilal ji retire? Hi, I'm Tanveer Gill, and I have a very important question for all of you. Where do you typically see company CEOs being interviewed by journalists? In conference rooms? In presidential suites? Or perhaps their plush cabins? But have you ever seen a company CEO being interviewed in a setting like this? Welcome to the boardroom, where there's one simple rule. We ask 21 direct questions from each one of our guests and give them 90 seconds per answer. Because in the boardroom, we don't only talk business, we mean business. On the boardroom today, we have with us a market maverick, a wealth creator, and the man behind Motilal Oswal Financial Services. He has spent decades decoding the secrets of the stock market, shaping India's financial landscape and guiding investors towards prosperity. Let's welcome Mr. Raamdeo Agrawal. Raamdeo ji, welcome to the boardroom. Wonderful to have you on the show.
It's my pleasure to have you here. You came back from Singapore and here we are.
We have one very important rule as part of this interview, which is we will take 21 questions and you'll have to give us your best answer in 1.5 minutes. And I have a timer over here for each question. I'll take the first question right now. Question 1, Raamdeo ji. You came to Mumbai and co-founded Motilal Oswal in a small office in 1987. In the last 4 decades, what has been your greatest learning in growing your business through different market cycles, up and down? Your time starts now.
Starting with 2 bosses, 1 pay, 0 capital, so it's a proper startup. And at that point of time, there were no startup capitals or anything like that. We were mad after the stock market as a conceptually. That's the founding thing. The capital we brought on the table was not the money, it was the passion and knowledge. Because I had worked as a research analyst for 2 years where there was no concept of research. So that time I worked. So we started with 0 capital and we started very humbly. But as things started opening up, the Indian economy, the opportunity in the stock market, and the change in the professionalism. From
but
the
in
old
1987, the economy had not opened. That happened in 1991.
No, actually, a little bit of liberation had started with VP Singh and Rajiv Gandhi. They had started a little bit, but it was very slow. But the real thing was that it was very primitive. Market was extremely primitive. Professionalism was not there. Technology was not there.
So then what gave you the confidence to start this business?
Yes, but we were mad after the stock market. The concept of the stock market.
Why were you mad after the stock market?
You can make money out there.
Okay.
So we were like 2 hostel students, like nowhere types, And parents also didn't know what is stock market. We are from farming community. So, but then you're hooked on to something. And the guys who, like Amitabh Bachchan must have got hooked on to Bollywood, Like that we got hooked on to stock market. We realized that to make money, you have to have some capital. 0 multiplied by anything is 0.
Yeah.
So we said, let's start. You have to find a business model where money is not required. You make money out of no money. That's how we started. Where we are sub-brokers, we were selling stuff for the upcountry people from Ahmedabad. And that's how we were making brokerages. And that's how we started.
Wonderful. Raamdeo ji, question 2. Motilal Oswal has traditionally focused on research-driven investing. What's that one investment philosophy that has always helped you stay ahead?
See, we arrived at this through the research and all over a period of time. We call it QGLP, quality, growth, longevity at reasonable price. So you need to have all of it. You have to have top quality business, you have to have top quality management, a massive growth trajectory, and bought at reasonable price. So good business, good management, reasonable price. This is a triangle of investing. Anyway, and everybody's formula is same. How do you address every single component? That's the art form.
And how do you practice that art?
I can do QGLP of any company in 30 seconds.
Give us an example.
Yeah, so how do I give example? Like you look at
a company that you may have invested in.
Yeah, so look at say Bharti Airtel in 2003. Let me give past example. What I did. The company was kind of the largest and the fastest growing cellular company when country didn't have any phones. So they were doing few million phones every month and growing at 100% per quarter. But it was a top. I mean, everybody was using cell phones, so they were very good. It was looking to be very good business and growing very rapidly. Management was top class. So good business, good management, growing very rapidly. Quality was very good. Bought at reasonable price. I could buy a potentially $5 to $6 billion profit in next 5 years at $1 billion. So that's how I bought, and we made 50x in 3 years.
Yeah, Bharti Airtel was definitely a defining story for the Indian stock market. Question 3. How did you get interested in the financial markets? You've given us some color on that. What gaps did you see in the markets that led to the birth of Motilal Oswal? Give us the backstory.
Yeah, so at that point of time, I mean, of course, our intention was to make our own living in the sense that we were fresh from the college and we had no job. So there were job offers. I mean, I could make a lakh, 1 lakh, 1.5 lakh at that point of time. But I said, no, I don't want to die there. I want to work for myself. And that's where the whole idea was to make 2 lakhs rupees per year. That was the initial idea. But we had long ambition of making billions. At that time also we wanted to make...
In 1987?
Yes, we wanted to make billions because the book I read, $1 billion Show thing in 1982, that was a Paul Edman book. I am driven by only books, concepts, all the American books at that point of time. So we had a big ambition, but we are not in a hurry to make that money. And at that point of time, we saw that there was no research. It was very traditional broking. And in fact, there was even doubt whether the trades were recorded very honestly. So we brought professionalism, we brought research, free research we gave to our client. And customer service was like 24/7. There were no telephone lines. We had 2 telephone lines, one for the office and one for my home. So we were promising 24/7, zero cost research to everybody.
Wonderful. Question number 4. In an interview with Forbes recently, both you and Motilal ji were present in that interview, and you said that the real turning point for your business was the Harshad Mehta bull run.
Yeah.
How so, and what was the experience like?
So till 1990, we had collected about 50 lakhs rupees after running family and everything. But the membership cost of membership was about 25 lakhs. So we paid that, we borrowed some money. So we're again back to zero when we opened the doors with the new members and 6 sub-brokers working for us. And then comes the Harshad Mehta bull run. In 19 months, we made 30 crores and no speculation.
Right.
So that became, and then of course it collapsed and it became 10 crores. But I said 10 crores is a lot of money. For 2.
How did you take that setback?
What setback?
There was no setback.
No setback.
30 crores went to 10 crores.
Yeah, it is from 0 to 10.
Okay.
You are saying from 30 to 10. I am saying from 0 to 10. So 10 crore itself was too much. I mean, you could buy a nice flat in Worli for 20 lakhs, 25 lakhs. Things were cheaper also at that point of time. So I think that was a lot of money. Even today, 10 crore is also a nice sum of money.
Yes,
and then that became the base, and we kept on building on that. We hired bigger office for research than working office, and then rest all the story kept on building up.
You were not worried about losing credibility?
About what? What credibility?
Investors losing interest in the markets and trust in the markets at that time?
We were also investors. It's a part of life. In the stock market, anybody comes. The stock market is not like a bond market. It has to be up and down. If it is not up and down, it's not a stock market.
Okay. Let's talk about those ups and downs.
Yeah.
In question 5, through all those ups and downs, you and Motilal ji have had a very strong partnership, unbreakable partnership. What's the secret sauce behind this relationship? What's the magic that keeps the two of you together?
I think it is the trust, unquestionable trust between both of us. We have a lot of difference of opinion on many issues. Like say on HR issues, or somebody to be recruited, not to be recruited, this building to be bought, not to be bought, or whether we should be aggressive in the market. Or it's not that everything is I say something, he accepts it, he says something, I accept. No, it's not like that. But it's a very healthy dialogue we have. But there is never a doubt about the integrity or the commitment, and then that kind of thing. Absolutely no issue of. I can lose.
You didn't have a problem.
I take care of 80% of the balance sheet. That is the treasury. I can lose 100%, and I'm sure he will not be happy, but it's fine.
I'm sure he would not be happy.
Yeah, he'll not be happy, but it's fine.
The company is named after him.
Yes.
That's not a problem for you?
No, why is it a problem? That's what I'm saying. There is nothing is a problem.
You're okay with the company being called Motilal Oswal?
Yeah, he told me, Raamdeo, in 96. See, in 1990, what happened was, the story is that in 1990, when we bought the membership from the market, you needed 3 years of experience to go into the ring. And he was the guy who was going in the ring. I was taking orders and all. So obviously, it had to be bought in his name. Now, the crazy law was that I couldn't have become his partner because the blood relatives only could be partner in BSE.
Got it.
Okay, so in 96, all this got changed, and then Moti said, Raamdeo, would you like to change the name to Raamdeo Moti or Raamdeo or Prudent? Or I said, this name is working well. I don't care a damn. Let's go.
Question 6, Raamdeo ji. Your mentor has always been the legendary Warren Buffett. How much of his investment view has shaped up your own investment philosophy and also the growth of Motilal Oswal over the years? With an example, if you could elaborate.
Yeah, it has been huge in the sense that I was more passionate about buying stocks between 87 to say 94 when I heard about him first time. Far more passionate. Even today, I'm more passionate about buying stocks, more convinced about stocks than him. He's the guru. But when I read his first annual report in 94, suggested by dear friend Sanjay Bhattacharya. So we read, I said, my God, what he's saying about companies and all. I used to think I'm a smart guy. So that really opened my eyes. I used to wake up in the morning and downloaded all the annual report from 65 to 94 and read in the morning itself. Still the Xerox copies are there, the bound copies. So the whole thing got shaped up with that. I had 225 companies in my portfolio of 10-12 crores. I drafted my wife to help me get out of this damn thing. She didn't care what is she selling. After a year or so, she brought it down to 15 companies. And that very year, my portfolio doubled in a flat market. So, the power of focus and quality investing, that gave birth to me from Buffettology. Wow. So, I have learned how to learn about the stock market from him. He's such a terrific global guru. I think he'll be remembered as a guru rather than for making money.
Indeed, indeed. Question 7, Raamdeo ji. Since we're talking about Warren Buffett, we know that Warren Buffett doesn't quite advocate buying mutual funds or active mutual funds. Active management is something that he doesn't advocate as an investment philosophy. He rather says buy low-cost ETFs. So whether it's a Nifty 50 ETF or the S&P 500 ETF, he's talking about buying index ETFs more. How does that work into your own philosophy? Because you have a thriving mutual fund business where assets keep fluctuating with the fluctuations in the market. So how do you, marry the philosophy of your guru with the philosophy of your business?
Sure. ETFs are also mutual fund for your kind of information.
Passive.
Passive, but it's mutual fund. What is mutual fund? A lot of people coming together.
Would you be okay if people bought only ETFs and did not buy active mutual funds?
Yeah, that's their call. I have both the wings. I have 50% or 40% of my assets are in ETFs, and that's why we have hedged our bets. So you have to figure out where exactly you are going to make money out of investing. I am in the business of investing. Okay, and the best format is the mutual funds in India because it gives you a lot of tax advantage because millions and millions of retail investors, they invest with the 5,000 rupees, 3,000 rupees subs. So for that, government has given them complete tax blanket, and which is not there in US. Okay, so this makes it far superior, what you call tax vehicle, this thing, and it's a very different market than US in terms of active management. The passive, most of the active managers, they're still bidding the ETFs or indices hands down on 3 or 5 year basis here. Lots of them are bidding by a good margin. At least we have been bidding by good margin. So that's the promise, and that's where people come. And by chance, at some point of time, they want to go to all the way to ETFs only. We have all the ETFs in the world.
But your guru, Mr. Warren Buffett, who I interviewed back in 2017, right? You remember that interview?
Yes.
He told me, I don't buy it. I don't buy the logic behind it. Could be a tax benefit scheme for mutual funds. It could be, incentivized on the tax front. You could get tax breaks. But ETFs is the way to go because this is low cost, this is effective.
Yeah.
And for somebody who doesn't understand the stock market very well, inside out, for the retail investor, this is the best investment there.
But
your own guru's not buying that argument.
Tell me, the issue is that a lot of people don't think that they don't know anything about the market. They think they know a lot about the market. Those smart guys, they would like to invest in active mutual funds. And they're right so. Even myself, I have 100% of money in active right now. Till the age of 75, I'll be in active. After that, when I retire, I hope I retire. At that point of time, I'll put everything in a passive ETF, S&P 500 India. I'll just put that because then I want market return. I don't want to care who is doing well, who is not doing well, which theme is working, which theme is not working. Mid cap, small cap. Don't want any headache. I want 14-15% index return, and I'm pretty happy.
Okay.
Yeah.
So that is what you advise for senior investors.
Senior investors, yeah.
Okay. Raamdeo, question 8. There is a new wave of investors in India, especially post-COVID. A new generation of investors have come to the Indian stock market where they almost think of the Indian stock market as a casino, a place where they can make quick money because of the market volatility. Do you think brokerage firms like Motilal Oswal are doing enough to educate and protect investors from speculative risks?
Why am I playing with you? The whole reason is that only, to give message that there is no money in speculation. SEBI is coming and telling that 90% people lose money. And yet after this, if you ask anybody, they all know that this is the ratio. And yet they want to dabble for whatever reason. They have fun, they want an entertainment, or they actually think that they can make money. And then a lot of people, they tell me that first crore I want to earn from the trading, and then I will get into the investing in a slow pace. But I don't think it works like that. You have to start working, slogging right from beginning, from very small money, and you have to believe in the power of compounding. The problem is nobody knows the power of compounding. Little money put over 10, 15, 20 years, and in this kind of a compounded market of India.
Who has the patience?
That's the whole issue. But without patience, you can't make money. You can't make money, I'm telling you. What Buffett is about, it's not about his brilliance. It's about his discipline and patience. I'm telling you, it is just, look at what he has done now. At the top of the market, he has sold $350 billion worth of Apple and all sorts of things and put in the US Treasury. He's at all-time high at $1.1 trillion.
So, and he's getting 4% risk-free return.
Not 4.8, 4.7.
Yeah, sorry, actually you're right. Yeah,
so and now his operating income from 25-30 billion has permanently gone into 45-47 billion. So now market has to give them multiple. So what I'm saying is that it's only about the patience. Now that 350 billion, they're a dry powder. If the market collapses, now it has already collapsed 20%. If it goes another 20% down with all this Trump tariffs and all, he's the guy who is going to be buying stuff left, right and center. If you don't have patience, please don't come to this market.
What would you tell a 22-year-old who's getting into the markets right now? How much patience should he keep, time-wise?
Unlimited patience. Jitna lamba patience, utna lamba gate. Market does 15%. If you're very lucky, very smart, a small portfolio, you might do 25%. उससे ज़्यादा तो राकेश वाला भी नहीं कमाया होगा. Okay, so at 25%, you double your money in 3 years. In 6 years, it'll go 4x. In 10 years, you'll roughly go 10x. But in 20 years, you'll go 100x. And in 30 years, you'll go 1000x. This power formula has to be understood by the people. And nobody understands this. Nobody gets it in. So if you don't get in, you'll just go haywire.
Question 9, Raamdeo ji. Motilal Oswal recently underwent a complete logo change. What was the rationale behind this change in logo, and what's the kind of message that you want to send out about the rebranded entity that Motilal Oswal is today?
Yeah, so the old logo was done in 1998, and that time it was a less than $1 million kind of a turnover company. We were not even listed, but we had put our heart in building that particular brand. Okay, then it went through a little more changes. But now the new marketing manager and generally thought process that company has leapfrogged to become a $5-7 billion company.
One of the largest brokerages in India.
Yeah, and capital market, and we have huge ambition in the sense that we are just about starting types, So that's the ambition of the company. So we said, let's change name remains same. Let's change the color. Color was like little more yellowish, reddish and all, which was not looking very palatable to the professionals.
You wanted to connect with the youth.
Yeah, so we wanted to connect with the youth, we wanted to connect with the growth, and we wanted to connect with the what could happen going forward in the next 10-15 years. So there is a lot of futuristic.
Connect with foreign investors as well?
Yes, I mean, not so much global, but the size. I mean, the mandate I had given to the thinkers who designed the logo is that we have to think about, today we are $5 billion, we have to first think about $100 billion market cap in next 10 to 12 years. So with that kind of a thought process, what kind of a image would you give? So they presented a lot of it, and this is what we liked.
Question 10, Raamdeo ji. Motilal Oswal's advertising and marketing expenses have been on the rise in the recent years. What is driving this sort of spend on advertising and marketing, and what do you hope to achieve from this exercise?
It's ultimate consumer company. I mean, we are connecting on it. You look at the level of engagement my customers have, the 5, 7, 8 million customers are there. They're at least 7, 8 hours, they're continuously in touch with my advisors or whatever. So it's a consumer company. We have to make them aware of not only our presence, but our strength also, because ultimately you are trusting with your savings or the advisory we are giving. So what we stand for research, we stand for skin in the game. So all advertisement company, if you see of Motilal Oswal, they are about the truth. They're not about my ambition. Say like when we say, what is the core? We say, think equity, think Motilal Oswal. What do? We don't do anything in debt. It's a 100% equity company, whether it is AMC, whether it is my own portfolio.
But why don't you do anything in debt? Risk-free return
Yeah,
for a lot of investors.
That's for the people who understand debt. I don't understand that. I'm not comfortable lending money.
But you could hire somebody who understands
Yes,
debt.
but I don't know what questions to ask him. I don't know what questions to ask him. So how do I run it? Because ultimately this...
Aren't you missing out on a big piece? Because, the debt capital markets in India are expanding and opening up.
Yes, this is the one asset class which goes at 15% without doing anything.
Equities.
Equities. Debt goes at 5%. So in 5 years, my AUM will become double without doing anything. Whereas in debt, it will take 15 years to double. You get the equation? Equity is exponential asset class, not understood by many people. So we want to be master of that at every stage, whether it is seed stage, growth stage, listed stage, unlisted space, and or decline space. Everywhere we would like to be catering to the customers. I mean, the logo which we have put in 87, the mission statement of the company is to help people make money in the stock market worldwide.
Question 11, Motilal ji. Technology is transforming the financial sector rapidly. How is Motilal Oswal leveraging AI? How can we not talk about AI, right?
Yeah.
Automation and digital innovation to enhance customer experience and investment strategies.
Yeah. So we are an old type, but still our tech prowess is amongst the best in the industry. Okay, we are not discount brokers. That doesn't mean that we are not technology companies. My technology platform is as sophisticated. My app is also as rated as any other broker. Just that my business model is different. I have a battery of advisors. Our firm believe I can fire all the advisors and I can become discount broker. But our belief is to make money in the stock market, you need help. Everybody is not self-driven. People need help in the decline of the market. People in this kind of mall, you need a lot of help. So that can come only through the research. If just by doing transactions of buy and sell, if you can make money, then life is very simple. No, stock market is very complicated. You need a lot of help. It's like new guy coming into swimming pool. It looks very simple. Go and you'll sink. So a lot of people will sink in the market because they don't have help. And they badly need help, I'm telling you. In fact, government...
So you need financial advisors, you're saying?
Beyond doubt, I think government, SEBI must make this thing, before you take any client, you must have capability, whether it is digital or robotic or whatever. You must handhold the clients, because clients are new. Out of 190 million, 150 million clients are first time to the market. What do they know? Nothing. They need a lot of guidance. We are doing very little, I'm telling you.
You think that's your competitive edge?
Yes. People, I mean, not only the investors, even the corporates, they need a lot of guidance. How the markets work. They don't know. They know how to make crankshaft, how to make cement, how to make some consumer goods. They don't know how the market works. And the opportunity to get the risk capital. India is the second largest risk capital country after US. Now this is the golden era for the entrepreneurs to tap this thing. Every day I'm meeting to one or two entrepreneurs who want to get 500 crores, 1,000 crores, 2,000 crores, and with that, what ambitions they have. So you have to guide them.
Question 12. With the rise of discount brokers, since you're talking about discount brokers in this environment like Grow and Zerodha, Does Motilal Oswal face stiff competition? I know you've answered that partly, but I want you to elaborate a bit more on that. Because how do you plan to stay relevant in an ever-changing market environment? You're looking at competing with discount brokers who can go as low as 0%, charging no fees, charging no brokerage fees. And so why should somebody prefer Motilal Oswal to them?
Yeah, so as I said, market is divided vertically, okay, where a lot of people, they would like to have advice with the broker and broking with advice, and they want to pay for it. We have not seen anybody going from our office to their office. So they have, see their mass reach, this 190 million. I think India is the most crowded market in the world, which is a good thing. Highest population may not be a great thing, but highest participated market in the world. I mean, we are from 200 million, we are headed for 400 million in next, I would think 5-6 years. So you'll have 400 million, and all kinds of investors are there. The guys who are very smart themselves, they don't need anybody. Okay, so they will go and buy the zero cost, whatever brokerage is available. But there are guys.
You'll never go zero cost.
I will not. I'm not competent to do just trade just like that. In any case, I'm an investor. I'm not that much a broking client. I'm more of a MF client. So MF may then again active and passive comes. So that is a different discussion. But here in broking, when you want to buy direct stocks, in that case, there are people who are very competent. The guys who, but my sense is 99% people, they need help. Now, whether they want to take that help or not, or whether we can provide that help to them, because if he's very small client, 1 lakh rupees, 2 lakh rupees, I can't provide him that help. I can't reach there. But somebody is a $100 million, $200 million. I don't think he's going to go and just, I want to buy 200,000 Reliance, and he will just push the button and at zero cost he will buy. So, he needs help. We have to work it out. Because how much you are saving? You are saving 10 paisa, 5 paisa, but then there is somebody on the side. He will say, bhai, फर्स्ट ओपनिंग में थोड़ा खरीदना, फिर मत खरीदना, फिर उसके बाद आखिर में समय देख के फिर ढंग से कर देना. It can make a difference of 2-3%. So what do you want? Do you want? I mean, are you focused on the brokerage or focused on the good trade?
Social media and influencers now play a huge role in shaping investment decisions. Do you think that is helping or hurting investors?
I think the investor has to be themselves very knowledgeable about whom they are following and how much they are trusting them. Because if the guys are not trustworthy, I think they'll die out themselves. So all these influencers, they know that they have to do a smart, honest stuff. What are their competencies, whether it is a corporate connect, whether it is a research, whether it is understanding charts, whether it is sentiment in the market. So they have to stick to that. And the consumers will decide. I mean, they'll come 3 times, 4 times, all 3 times he loses money. He will say, this is useless fellow. In fact, he will going around in town and he'll say, this guy is useless. So I think influencers' life is also very limited if they don't do a good job. So I think it's a very democratic world, particularly in the social media, and they'll find their way.
Earlier, investing was limited to a select group of individuals, right? Now you're seeing the rise of the retail investor in India. But within that cohort as well, you're seeing young professionals and college students actively coming into the markets. We've discussed this in the past too. How do you see this changing or impacting the Indian stock market and the health of the market overall, in terms of the depth that the market is seeing, the participation, the broader participation it's seeing? How healthy is it making the Indian stock market?
So this is first time it is happening. Till 1990, it was not there. From 1990, post-COVID, once digital infrastructure got built and KYC was made easy or digital, we are getting 4 million customers every month. So it's a revolution. And after that, market has only gone up from 8.
And these are young investors.
They're young investors. They're not mature. So a lot of guys will get hurt. But they'll learn. They will learn at the cost of, say, 1 lakh rupees, 2 lakh rupees. But future is much brighter, and there's a lot of money to be made. See, the guys who are patient, those who are willing to learn, those who just don't dabble into direct stocks without understanding things. In fact, dumb guys are going to make more money, I'm telling you, with little discipline, some advisory, somebody guiding them. Say, my servant asking, sir, what do I buy? I put him into some kind of SIP, and then he's not worried or she's not worried for 5, 10, 15 years. Then when she opens her eyes, she realizes that she has given 5 lakhs, but it has become 20 lakhs. That kind of thing. But if somebody is thinking that by bringing 5 lakhs, I'll make 10 lakhs overnight, then it's a bad dream, I would say.
Question 15, Raamdeo ji. What is that one blind spot you think the Indian investors have at this point? What is that one misconception that needs to be cleared before they get into the stock markets? That one thing that investors need to know about investing as we see more participation come to the markets?
Yeah, I would say broad, when I talk to a lot of people on housewives and all who are coming in now, so their expectation is like doubling in 1 year, doubling in 2 years, 40, 50, 60% or maybe 100% kind of return. So that misconception is absolutely wrong.
Not only housewives.
Everybody.
Bollywood celebrities are coming into the market,
yes,
right?
So
we were talking about how businessmen, their children, as part of the succession planning, don't want to take over the business, but they want to take the stock market.
I didn't want to hurt housewives per se. But I'm saying that
they also have a right to make money.
They have full right, in fact, more right to be in the market. So what I'm saying is that the return expectation has to be, first thing is, are they investing or speculating? Okay, a lot of them are speculating. So no advice for them and no guidance to them. Okay, the guys who are investing actually through SIP or through direct stocks, their expectation should be around 15%. The pros, the very good fund managers, you will find the long term, with all the tax benefits, they are not able to beat the market by more than 2-3%. Okay, so 18% you have done brilliantly. But if you are super brilliant, like you are Rakesh Jinwala, expect 25%.
Or Raamdeo ji.
Raamdeo ji, I don't know. I am somewhere between 18 and 25 types, So what I'm saying is that you have to have your return expectation to be right. Achha. Second thing is return expectation again. When the markets are high, their future return expectation should be low. Now markets are low, your return expectation should be a little higher. So at the top of the market, 26,000, for next 5 years, I would say you'll make 11-12%. At 22,000, now you have a chance to make 14-15%.
So right now, April 2025, you think is a good time to get into the market?
Fantastic time. Actually, every time is a good time, but this is a better time than what it was 6 months back. So this is a good time. I think you should expect 14-15% return across the portfolio.
Question 16, Raamdeo ji. President Trump's tariff announcements have rattled markets around the world and has really hit investor confidence hard. There are a lot of investors out there who are very scared. What would you tell them? What would be your word of advice to them?
They have to be cautious. This is once in a lifetime. I mean, in my lifetime also, I have not seen anything as complex and as sudden as what is happening, unexpected by the market and kind of not required time, like Ukraine war, like Israel war. But this is a war of economic war of different dimensions altogether, where America is up against all the 170 countries. He has not spared anybody. Nobody. Canada, Mexico, China, EU, India, nobody has been spared. So it's an asymmetric war. Asymmetric war in the sense that I am fighting with only America, but America is fighting with also 170. So how the outcomes will, so I think the hurt will be maximum. They think that their hurt will be less, but my sense is finally they will get hurt a lot more than anybody else. For me, okay.
But all markets are selling out.
Yeah, but because they're all interconnected. See, all the money is lying in US. So US is the big state, like they have $60 trillion market cap. All the wealth is managed there. Even Gulf money or all the pension money of Japan and Australia, they're all investing in US. So US is the big daddy of investing, global investing.
So how do you navigate through these uncertain times? What's the best way to save your portfolio? The downside, protect the downside risk.
See, you can't time the market, okay? Because I don't know how much is already priced of all this risk. See, we are not global macro guys. So, and even the global macro guys have no idea what will be the outcome. Now, my sense is it will hurt the earnings in US. There will be decline of 1 or 2% in their GDP, and there could be rise in inflation. There could be yield drop. He's saying that capital gains tax might be abolished. So a lot of things are going to happen. A series of things are going to happen. At the end of it, my sense is if it is negative, a lot negative for US.
Question 17, Raamdeo ji. You have been in the markets for the last 4 decades, 40 years, seen many bull bear cycles. How would you describe this current cycle to the Indian investor?
What I've seen is that every time the bull run happens irrationally and bust also happens rationally, I could say. I mean, for irrational, that also is irrational.
Irrational,
okay, so the both.
When the markets go down, they just go down.
They go down. So like this one is completely irrational. There's no reason. I mean, you have picked up this global fight and China is standing one side, US is standing one side, and 50%, 100%. So
India is also trying to negotiate it.
Yes, of course they'll negotiate. See, what I'm saying is that corporate earnings are going to be hurt. Our problem is very limited actually. Stock market guys' problem is very limited. What's happening to the earnings of a company where you are investing, or if you are talking about broad this thing, what's happening to the aggregate earnings of the Nifty?
So how will Indian companies get impacted because of this global turmoil?
I don't see much impact. 2%, 3%, yes. I mean, like
Not even Indian technology, IT companies.
right now they have
Outsourcing US.
right now they have said nothing on services. Services left completely untouched. Okay, pharmaceuticals have been left untouched. See, there'll always be some positive outcome. Say like comparatively you are better off. So you might get America and China plus one kind of a strategy. So I think businessmen are going to they stand to benefit. How dynamic they are in using that opportunity, that only time will tell. But you have to be cautious in the sense that there's a turbulent water. You are jumping into swimming, so you have to be very careful what you do.
Question 18, Raamdeo ji. How do you see India's future in a multipolar world? And what does that mean for the Indian stock market, which is a reflection of the India growth story? And the stock market, of course, recently became the 4th largest market in the world by market cap. Of course, these league tables, the position keeps changing.
Yeah.
But recently, it did hit that mark. So what is India's future place in the world, do you think?
See, India has been growing at about 9% dollar for last 25 years. That number never comes out. But if you do your nominal dollar GDP growth of India, we have done about 9.5%. I don't see any reason why we will not keep growing at 9% dollar in next 25 years. And that doubles my GDP from current 4 trillion to every 8 years. So we are in 2025. By 2032-33, we should be $8 trillion economy. I can tell you, Tanvi, nobody can model it. What it means to be $4 trillion economy, what it means to be $8 trillion economy, and what it means to be the next one in 2040. You'll be a $16 trillion economy. You'll be more like China.
More like China.
Yeah. So and then you have the democratic market economy. See, China is not a market economy. Chinese markets have done nothing. Korean markets have done nothing. Indian markets have given as much dollar return as US has done. So there is no reason why we will not make that money. So now the issue is, how do you play this? I have no reason to believe that the compounding of the economy and compounding the market, which has happened in the last 25 years, there is any disturbance. If anything, the fundamentals are stronger. But in the long run, even that doesn't count, because sometimes fundamentals are strong, sometimes it is weak. Yeah. So on the whole, my sense is, let's stay with this 15% kind of a rate, and maybe 10-11%, 2-3% you cut for the devaluation, 10 to 12% dollar portfolio growth. And then on top of it, my active guys can give me 5-6% more, so then I can get 15% dollar growth, which is fantastic.
I see a big smile on your face. Putting out those numbers. Okay, last 3 questions, Raamdeo ji.
Yeah.
What would India's growth mean for Motilal Oswal in the next 10 years?
Oh, wow. We are the biggest beneficiary of this. Biggest beneficiary. Because, see, capital market is not going to grow at 15%. They are going to grow at 20-25%. And you know, when I started in 1987, the daily turnover, just to give a benchmark, daily turnover was 200 crores per day. Okay, how many brokers are there? 500 brokers. And they were struggling to settle in T+15. They were struggling, and actually settlement used to happen in T+21. 15 is for trading period and 7 days to settle. Today, daily turnover is 400 lakh crores. So it has expanded by 2 lakh times. How many brokers are there? Only 10 or 15. So the market has exploded, but number of participants have come down significantly. I don't see any reason why it will be any. Internet is very undemocratic, let me tell you. Very monopolistic. You know what is happening in US? Anything which goes on internet, it's a winner takes it all. You know, because internet is all over, from Kashmir to Kanyakumari. And if anybody likes anything in Kashmir, even Kanyakumari guy buys that. Why he has to get some Saudi stuff from Kerala or something? So it's very, very consolidating. And hence we have to see that Motilal Oswal's biggest challenge is, in this rapidly growing market, we are on right side of the consolidation. We should not become irrelevant. And that's why this marketing expense and all you talked about, we are going overboard. We said people should not forget Motilal Oswal. You know, we'll be in the airport, we'll be in the billboards, we'll be in you open CNBC, we are there throughout. We'll do even more. We should not err in not telling you that we exist.
Which is why now you're on Mashable as well. Question 20, Raamdeo ji. What about succession planning? You and Motilal ji have run the business for nearly 40 years now. What's the future looking like? Who will take over the business once you and Motilal ji retire?
Yeah, so I think it's on top of the mind of me and Motilal ji both. It's not that easy stuff, that something which you have built yourself and you are still that much active. So one thing is for sure, that for next 10-15 years we are around. Okay. And my son as well as Motilal's son, both are very well entrenched in the business, but they are right now fund managers, analysts, business managers. So they have been put to actual grounding, you know, so that they build relationships with the senior management and all. But professional team is fantastic. I mean, I'm doing interview here right now. Market is whatever most exciting market right now. So obviously I don't have any operating responsibility. Motilal is there, but he also doesn't have any operating responsibility. But he's the guy who runs the train. You know, everybody reporting into him. I've been given freedom to look at strategy, meeting people, going around. So that's what we are pushing down everything to the professional. So right now, if we actually go out for 2-3 years, probably company might do better.
Okay.
So it's that professionalized, but still the buck stops at us. That will start. My sense in next few years' time, it will start stopping at either professional complete CEO or maybe jointly shared by my son and Motilal's son.
To the last question, Raamdeo ji. Question 21. Which business do you think would contribute most to Motilal Oswal's success story going forward? The securities business, AMC, advisory, etc. You wear many hats in managing all these businesses today. But where does your heart lie? Where are you most bullish?
Yeah, so right now, if you go by the balance sheet, 80% is in treasury, so investing. So that will always remain very, very large. What happens is that 20% money of the balance sheet goes in operating, that earns about 50-60%. You know, on say 4,000 crores, I earn 2,000 crores. On 8,000 crores, I earn say 1,500 crores or 2,000 crores. So you know, it's a twin engine model. So where whatever we make from the operating, that goes into treasury, and the treasury itself earns about 18% or so. So it's a compounding machine, which is what Buffett is all about. You know, it's a compounding machine, but his compounding is on for 65 years. My compounding is on for say maybe 20 years. So that we have to see to it that till I am around, the compounding continues very patiently. We should not be in hurry. Coming back to your question about what is dear to you, I'm personally spending a lot more time on the treasury side, and Motilal is spending almost 100% of the time on operating side. That's how it is being done right now.
Raamdeo ji, thank you very much for joining us on this edition of the Boardroom.
Absolutely.
And thank you very much for taking all the questions head on. We wish you the very best.
Thank you.